This might be the most informative piece we've produced on AI chips, and the reason for that is we've done our homework. So over the past decade, we've written somewhere around 2,400 research pieces on disruptive technologies, well over 350 pieces on artificial intelligence and AI chips. Sometimes we even forget what we've written about, so I get quite excited when I come across gems like this, a piece we wrote in November of 2016 titled "The Artificial Intelligence Stock That Rocked Wall Street." Oh, if we only knew at that time. And we concluded in that piece, NVIDIA looks like a great $45 billion picks and shovels play on AI computer chips, and it may be the closest thing there is to a pure play artificial intelligence stock there is at the moment. Indeed, that was true. And the following spring, we wrote this piece, Investing in GPUs for AI, AMD versus NVIDIA. And what we wanted to do there was look at all producers of GPUs and make sure that we were investing in the leader and that they would stay the leader. And even at that time, NVIDIA had a 73% market share, somewhere around 80% today. But one of the things we can look at, and that was depicted in this chart here, is the number of mentions of AI and deep learning. And this was relevant back then. Of course, nowadays, everybody has mentions of AI and just about everything the company produces. But you notice here we perused their investor deck or their 10K to see who was talking about focusing on AI, and it was all NVIDIA by far. There was a few mentions from AMD, including this typo on their homepage that we noted in that article where they talked about machine leaning. So indeed, they weren't taking it too seriously, and when we fast forward to today, we want to see were we wrong or right about our assumption that NVIDIA would be the leader in AI chips. So today we want to identify a metric to track AI chip growth. So you can look at all the market share estimates you want, but the ground truth is always revenue growth. So we want to identify what that is for AMD and NVIDIA. We want to look at profitability, valuations, of course, and at the end here, we're going to show you a surprise that's quite interesting. So let's start talking about a apples to apples metric we can use for AI chip growth. That would be the data center segment. So over a year ago, AMD started segmenting their revenues similar to how NVIDIA is. And you can see NVIDIA is the top table, AMD is the bottom table. So then we can say, all right, data center, it would be AI chips. What percentage of that is of total revenues would that be? So for NVIDIA, it's 56%. So the majority of the revenues come from AI chips. Last quarter, it was, I think, somewhere around 80%. And then for AMD, you can see it's just 26%. And now, since we have this metric, we can start to plot it over time. And here's, of course, the NVIDIA chart that's always remarkable to look at, that quarter that just blew everyone's minds. You could see where AI chips accounted for 80% of their total revenues, and you can't really do a compound quarterly growth rate here because of that anomaly data point, but they're expecting another quarter of something that's going to be somewhere around the same, and they've told us total revenues at $20 billion, and then if last quarter 80% were data center, we can just roll that forward and say, all right, well, maybe they're going to expect around $16 billion in data center revenues. That's the black line you see on this chart. So when we look at AMD versus NVIDIA, you can see that, well, AMD was producing a decent amount of revenues there from data center, and we're assuming here that both are defining it relatively the same way. But what's interesting to note is that when NVIDIA saw that big burst last quarter, that AMD didn't see anything similar to that. And in fact, they're not even growing their data center revenues, even though we only have 5 quarters worth of data. We could see it's relatively flatlined. Well, that's all expected to change when AMD debuts their MI300 chip, which they launched in November of last year, just several months ago. They're expecting $2 billion from that chip in 2024. So then we can look at last year's revenues and, well, we want to see what they managed to do for this year. Probably not very much. We have to wait for that last quarter. But they're going to tack on $2 billion. Analysts expecting $10 billion of data center revenues for AMD in 2024. Now, The bulls are going to argue that NVIDIA is leaving enough breadcrumbs for AMD to enjoy very significant GPU revenue growth, and we would certainly agree with that. The demand has been through the roof, and anyone that can produce a chip should be able to sell it. Now, the bears are arguing, we've had several subject matter experts in our Discord server raise this, that AMD's subpar software is going to keep it from gaining much ground on NVIDIA's CUDA. That's their AI software platform. And when we look at this Forbes piece titled, "Don't Bet AMD Can Rise on $400 billion AI Chip Market," whilst it has a bearish tone, it talks about how the biggest hyperscalers, or let's say the three big hyperscalers out there, Amazon, Microsoft, and Google, Amazon might enlist AMD as its supplier, so might and $5 maybe get you a cup of coffee at Starbucks. Microsoft and Meta are said to be incorporating this chip into their AI workloads. OpenAI intends to incorporate AMD's new chips in their latest software. So what you also need to consider here is that both AMD and NVIDIA are facing competition from hyperscalers building their own GPUs, like Google's TPU or Amazon's Trainium. And Microsoft and Meta have said they're going to start designing semiconductors. So then that begs the question, well, for NVIDIA, what percentage of revenues are going towards these hyperscalers? And this little note in their last quarter tells us something. It says that one customer represented 12% of total revenue for the third quarter of fiscal year 2024. That's meaningful, right? And then another customer represented 11% for the first 9 months of fiscal year 2024. So there's some timing issues there, but the point is that these hyperscalers developing their own chips is a threat, though NVIDIA might be able to combat that in a couple of ways. The first thing to note here, their CUDA parallel computing programming model introduced in 2006 is just used a lot. So you can see this metrics here. We've highlighted one. 15,000 AI startups use this. So those are the future winners of tomorrow that are going to, at least the ones that prosper, will be spending more on NVIDIA hardware. Over 1,600 generative AI companies are building on NVIDIA's stack. So these other metrics lead us to believe that they're certainly going to be able to fill some of that loss should it happen. And when we look at blue ocean total addressable market, so what hasn't been captured yet based on demand, so AMD expects AI accelerators to reach a $400 billion market by 2027. NVIDIA sees $300 billion for data centers. Let's split the difference and say it's 350. We can then annualize the AI chip, data center revenues for both companies, and we get around 18% market penetration for AMD and NVIDIA. So there's a lot of room to run there. That would be bullish for both companies. Now, when you look at what NVIDIA is doing aside from just producing chips, I liked this slide in the recent investor deck that talks about enterprise AI being the next big AI opportunity. And you can see this diagram here where they've sort of spelled out what that might look like, and you can see some platforms in there. You've got Snowflake and Databricks, and you talk about these enterprise AI chatbots, the idea that being that you're giving everybody in your organization a chat GPT chatbot that can tell them anything they need to know to do their jobs, provided their permission to view that. You can see how they're packaging their LLMs with NVIDIA AI Enterprise. So you could certainly plug in proprietary chips to this. And the things to consider about enterprise AI. So first of all, once it works, nobody calls it AI anymore. So you can just expect this to be in all corporations eventually. And a company's biggest competitive advantage will then become their own proprietary data sets. So intuitively then, larger companies are only going to expand their competitive moats because they have so much more data. And then eventually, I can't remember if Synopsys said this or NVIDIA did that, every large company out there may look to develop their own proprietary hardware because it's just going to perform so much better. Now, is NVIDIA capable of staying on top of this? Well, they have the resources now to acquire competing solutions and gain traction, even though their ARM acquisition fell through. That was kind of a disappointment, but they're certainly not hurting at the moment. Now, the other question to ask here, what companies might pose an immediate threat? Well, Microsoft, you can see our recent piece we did on Microsoft just to see how varied it is, the different things Microsoft plays in. So That seems to be, just after doing that piece, less of a threat. You have Palantir. Palantir sometimes rubs companies the wrong way, and NVIDIA doesn't. And C3 and their the next CRM platform story, they need to take notice here as well when we talk about enterprise AI and NVIDIA dabbling in that. Now, when we start looking at profitability, I love this statement: profits are an opinion, cash is a fact. So we don't spend a lot of time looking at profits because they can be measured in so many different ways. We like to look at gross margin as an indicator of potential cash flows. Cash fuels R&D spend, and that becomes a competitive advantage. So free cash flow helps fuel future growth. And you can see here, AMD on the top, their operating cash flows, NVIDIA at the bottom. And certainly NVIDIA's had those spectacular recent quarters, but you can see they've got 10 times over the past trailing 12 months, 10 times the operating cash flows that AMD does. They can use that to increase their moat, and AMD is clearly playing catch up. When we look at gross margins then to say, all right, which company is fundamentally more profitable? Well, you can see first interesting thing is that for the trailing 12 months, that gross margin for NVIDIA jumping to 70% from, let's say, the low to mid 60s, or even lower than that to the mid 50s. But that big jump perhaps being pricing advantages they have because of demand. But look at AMD just sitting there around 45% and not doing a whole lot. Now, we've painted this picture of AMD being a laggard as a company, and we certainly, because everybody will want to know, need to look at performance. We invest in companies, not stocks, but this is interesting. So you probably wouldn't expect to see this, but we took the performance of a varying number of companies here and two benchmarks from that original piece that we did on the artificial intelligence stock that rocked Wall Street. So NVIDIA performed over 2,000% from that time. AMD, 1,400%. That's nothing to sneeze at. Now, if you look at this chart, you probably can't see it very well, but NVIDIA and AMD are very volatile. But look at that yellow line. That happens to be Synopsys. That's a company that we like. They produce software that doesn't matter who ends up winning in the chip war, their software is going to be used. And they're now using AI to design AI chips. Very cool stuff. So that's an interesting company. Then you have a benchmark SMH, that's the largest semiconductor ETF, returning 392%, and NASDAQ 182%, and Synopsys, the company we talked about, 751%. So I thought those performance numbers were relatively interesting, but what's more interesting when you look at performance is to consider what that does to valuation. You have AMD using our simple valuation ratio. That's just market cap divided by annualized revenues. For AMD, it's 10. NVIDIA, it's 16. So they're not that far off as they used to be. We'll look at that in a second, but we don't invest 3 times our catalog average, which is currently 6. So NVIDIA is quite rich. If it was at 18 or higher, that we wouldn't invest in it, but it's certainly, you need to consider those anomaly quarters that are impacting that because we use annualized revenues, right? We take last quarter, multiply it by 4. Now, NVIDIA should certainly enjoy a richer valuation. They're growing faster. They're more profitable. But what you need to consider when you look at numbers like this is history if you're investing in either of these companies. Here we've plotted out AMD's SVR over the numbers that Yahoo Finance gave us. So you can see it's increasing. That would be the expectations of analysts that they're going to do those big numbers, right? Then you have NVIDIA. Look, they're kind of floating back down to earth. That's probably more a function of those big numbers driving that ratio down. And then we've plotted both SVRs. You can see they're plotted against each other. See the big gap? Well, that's narrowing, right? So NVIDIA's is decreasing, AMD's is increasing. So I thought that was relatively interesting to note that both companies aren't that far off when it comes to valuations. Now, going back to the garage, when I worked at HP very early on in my career, they used to have these posters up all over. Didn't do them any good, but I liked that idea of the term. You always go back to basics. We apply the same methodology across all disruptive technology stocks. And one component of that is always choosing leaders over laggards. AMD's playing catch up here. So there's plenty of opportunity for both AMD and NVIDIA if you believe those TAM numbers, but we have a hard time seeing sufficient reason to hold AMD over NVIDIA as we concluded somewhere around 8 years ago. So I've put up this other video here that you might be interested in. It's titled What Does NVIDIA, or it relates to what does NVIDIA do next. Please make sure to subscribe to this channel. We'll be putting out more great videos such as this one. Thanks for taking the time to watch this today.